Charlie Munger is an American billionaire investor, businessman, former real estate attorney, architectural designer, and philanthropist. He is vice chairman of Berkshire Hathaway, the conglomerate controlled by Warren Buffett. Munger served as chairman of Wesco Financial Corporation from 1984 through 2011. He is also chairman of the Daily Journal Corporation, based in Los Angeles, California, and a director of Costco Wholesale Corporation. Charlie Munger, one of the world's most successful investors and the business partner of Warren Buffett, bought $37 million of Alibaba stock through the Daily Journal Corp. in the first quarter of 2021. He describes three of his investment principles as detailed in his book, Poor Charlie's Almanac. The first principle that Munger follows is assessing the risk of an investment. This means avoiding permanent loss before analyzing the potential return of an investment. When it comes to Alibaba, there's one risk that stands out, in particular the fact that Alibaba is based in China, which has a different regulatory and legal system than the US. Munger believes that the potential reward to risk is high enough to justify an investment in the company. The second principle is allocation, specifically capital allocation. As an investor, the best use of one's capital is always measured by the next best use or opportunity cost. This means that based on this investment decision, Munger believes that Alibaba provides a superior investment opportunity compared to other major technology companies such as Facebook, Amazon, Google, and Microsoft. In addition to opportunity cost, Munger emphasizes that good investment ideas are rare, and when the odds are greatly in your favor to bet heavily based on the portfolio of the Daily Journal Corp, we can see that Munger has a concentrated stock portfolio. The portfolio only has 6 stocks, which include Bank of America, Wells Fargo, US Bank Corp, POSCO, BYD, which is listed overseas, and now Alibaba, which represents one of the portfolio's largest positions. While Munger is extremely patient with his investments, sometimes waiting years before buying a stock, he isn't afraid to bet big when he finds a major investment opportunity. In my whole life, I have known no wise people over a broad subject matter area who didn't read all the time. None. Zero. You'd be amazed at how much Warren reads and how much I read. My children laugh at me. They think I'm a book with a couple of legs sticking out, Charlie Munger said. Following the stock market crash of 2008, Munger bought stock in major financial companies which traded at substantial discounts due to the market sell-off. Following the financial crash, Munger's investments in these financial companies, including Bank of America and Wells Fargo, have increased significantly in value. After waiting over 6 years, Munger has made a major investment again, this time in Alibaba, following the 30% plus the decline in the stock following the company's regulatory uncertainty. Munger is taking advantage of investors' fears regarding Alibaba, allocating an estimated 10 to 19% of the Daily Journal Corporation's portfolio to the company at a cost basis between $225 and $270 per share. Since Munger focuses on the long-term fundamentals of businesses that he invests in, he focuses less on what the stock might do in the coming weeks, months, or even years. Instead, as seen through both the Daily Journal Corp and Berkshire Hathaway, Munger prefers to hold his investments for multi-year or even multi-decade long time periods as long as the business quality remains high. Munger's third and final investment principle is analytic rigor. While this translates to an extensive investment research process, Munger emphasizes that it's better to remember the obvious than to focus too much on specific details. If we apply this principle to Alibaba, the investment thesis is pretty clear. With hundreds of millions of people increasing their income over time, this leads to higher purchasing power, which leads to higher retail spending. This directly benefits Alibaba, which has the largest market share in China's online retail market. That being said, this is dependent on China's economic growth as a whole. China has a track record of high economic growth and is expected to continue rising in the coming years despite its scale. And Munger has expressed this view on China through interviews and annual meetings. Munger doesn't just talk about China and has, in fact, invested in the country before. For example, Munger bought a significant ownership stake in BYD, China's largest electrical vehicle company, through both the Daily Journal Corp and Berkshire Hathaway. Since Berkshire Hathaway's purchase in 2008, BYD stock has increased over 10 times, making it one of Munger's most successful international investments. In addition to China, when analyzing a potential investment, Munger states to focus on the business itself and to not overanalyze the stock market and the company's stock. I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than they were when they got up. And boy, does that help, particularly when you have a long run ahead of you, Charlie Munger said. When we analyze the Alibaba business, the company has numerous growth opportunities and competitive advantages. In terms of growth opportunities, in addition to Alibaba, China retail businesses, Alibaba continues to expand internationally. It has a number of strategic investments in South Asia and Southeast Asia especially, and continues to enter new regions. Alibaba Cloud is the other major business to focus on. Alibaba Cloud is the leading cloud computing provider in China with an estimated 40% market share, but is also one of the leading cloud providers in the world alongside Amazon's Oz and Microsoft Azure. With cloud spending significantly lower in China compared to the US and China's increasing digitization, this serves as a major runway for Alibaba Cloud. Financial technology represents another growth opportunity for Alibaba through the 33% ownership stake in Alipay, one of the largest payment companies in China, and is expected to face major challenges due to increased regulation, specifically regarding their lending business, which was one of its most profitable segments. That said, with large total addressable markets for both Alibaba retail and cloud businesses, Alibaba still has major growth opportunities even with the financial technology business held back. Aside from retail, cloud, and fintech, Alibaba has a wide variety of growth opportunities in areas including smart logistics, online pharmaceuticals, consumer services, artificial intelligence initiatives, and other businesses as well. Alibaba's advantages primarily fall into two categories: intangible assets and network effects. Major intangible assets include patents, employee talent, regulatory barriers, and data. Meanwhile, Alibaba has marketplace benefits from classic network effects in which the Alibaba platform becomes more valuable for each buyer and seller that joins. While competitors have been taking market share from Alibaba over the years, what's important to emphasize is that the e-commerce industry is not zero-sum. The continuous growth of the overall e-commerce market creates room for multiple winners in the industry. In addition to the business itself, Munger makes sure to analyze the management team before investing, which is important for the long-term success of the business. When it comes to Alibaba management, despite the popularity of Alibaba co-founder Jack Ma, Ma stepped down from the Alibaba board in 2019 and no longer serves an executive role in the company. The key members of the management team include Daniel Zhang, the CEO of Alibaba, and Maggie Wu, the CFO of Alibaba, who both have extensive finance, work, and educational experience. Dan joined Alibaba in 2007, starting out as the CFO of Alibaba Taobao Marketplace, rising to Alibaba COO in 2013 and became the CEO of Alibaba in 2015. Meanwhile, Wu started out as a CFO of Alibaba.com and eventually became the CFO of Alibaba in 2013. And she's also the head of Alibaba Strategic Investments. When it comes to assessing management, one of Munger's highest priorities is to assess the integrity of management. This is extremely hard to analyze from an outside perspective, but it's likely that Munger had the chance to learn about Alibaba management directly or indirectly through one of his connections, such as Li Lu, who Munger describes as China's Warren Buffett, who manages a portion of Munger's wealth through Himalayan Capital, a multi-billion-dollar investment firm that invests in the US and Asia. Li Lu has invested in Alibaba before buying $34 million of Alibaba stock in the first quarter of 2020, so it's a possibility that Munger discussed Alibaba with Li Lu before investing. That said, Munger's investment in Alibaba signals that Munger trusts the management team. What is your opinion about Charlie Munger? Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel, hit the bell icon for more updates and notifications. Stay safe, and we'll be back soon with another video.